Good morning. I'm Rae Le Roux, and this is Market Outsiders. My co-host Naman Mian is not with us today, so it'll just be me walking through some news and the interpretation of that news through both an economic and a market lens. We've identified that a lot of people that are building business acumen and wanting to understand not just how to trade a stock, but also just what is actually happening in the broader stock market don't know how to read beyond the surface of business news or beyond markets at large. So, we're going to do a little bit of that each day. Today, I'm going to focus on a few of the key things that are happening, mostly in the US economy, because of the size of it and also because of the impact that the US economy has on the rest of the world. Two major things that are kind of on the table today. One, I'm going to talk about Trump's first 100 days in office. And second, I'll talk about the UPS news from late last night. I'm going to start with the UPS news, and then we'll go back against the backdrop of the first 100 days of Trump's set in office. So, UPS, here's a headline from the Washington Post published today at 3:30 a.m. UPS set to lay off 20,000 workers. It reduces business with Amazon. This is huge news. I've talked before on Market Outsiders about how one of my personal economic indicators, not a market indicator, an economic indicator, is employment. I look at employment not just by sector, but we've also at Management Consulted in our research arm covered employment in private sectors, such as the consulting space, for a number of years. And employment is a top indicator, not just for me, but for many, on the health of an economy, because if people remain employed, like during COVID when the stimulus was put into place to keep people employed, if they remain employed, then they continue purchasing. If they continue purchasing, then that keeps our consumer flow going, and that keeps other businesses in business. So the US as a consumer economy has a very significant dependence on employment in the first place. So this news is really big. UPS set to lay off 20,000 workers as it reduces business with Amazon. But what I want to do today, in just a couple of quick hitting minutes, is go down through what this news actually means for you and for me and for the economy at large, and where we might expect to see other businesses trade off in the next few days because of this news. So UPS announced late Tuesday that it expected to cut 20,000 jobs this year and close 73 buildings in the next 2 months. So there's not just a labor change, but an infrastructure change. As the company reduces its business with Amazon and faces wider economic uncertainty. So I want to separate the two of those, because when you put those in an and, it's a little hard to note which one is actually which. One piece of what UPS is doing is addressing current economic uncertainty. We saw at the beginning of April an economic uncertainty sell-off, which is different than an economic discovery sell-off. And I want to highlight the difference between the two. When Trump on Liberation Day put tariffs into place, they were not priced into the market. Even though Trump had said that there would be tariffs, the tariffs that he put and the wide sweeping nature of them, and also the immediate realization of them, caused a market sell off because a lot of people did not factor the reality of economic tariffs into their models. I've run the models on the back end. I've been there in the room figuring out how somebody should both figure out what their stock valuation should be, but also probably more importantly, what they should do in response to broader economic factors. And so if you had a discovery like COVID-19, that was a discovery sell-off, super different, right? Because all of a sudden there was a new moment in time and it was going to definitively impact something. When we saw the crash of 2008, same thing. Right? That was a discovery sell-off because all of a sudden we realized we have not been valuing books appropriately. Enron, same thing. This is different. This is an uncertainty sell off because all of a sudden people are factoring in some of the reality of what might happen with tariffs, but not all of it. And so I'm going to read on because in the UPS article, there's some really rich information. If it was Amazon and it was because Amazon was pulling back and wider economic uncertainty, this would be a hallmark of where we are as a US economy. Because it's not, as I'll explain, then it says something more nuanced that you have to really pay attention to, right? It said in their first quarter earnings news release that the moves were expected to save $3.5 billion this year. This is a cost-cutting measure. And what this means is that the Amazon business, as you might expect, is probably some of the lowest margin business for UPS. Because of that, it says we are doing this in connection with our anticipation of lower volumes from our largest customer. In January, this actually goes back to way pre-tariffs. They announced their plan to reduce the volume of Amazon shipments by more than 50%. So the article was misleading at the beginning. It said that it was this reduction of Amazon purchases, which might mean people are just buying less from Amazon and therefore they're not going to ship them through UPS. No, this was a strategic decision by UPS, and it was focused on cost cutting originally. They identified that change to happen before the second half of 2026. And when they talked about it specifically, Amazon commented that at the time, due to their operational needs, UPS requested a reduction in volume. So again, this wasn't Amazon driven, this was UPS driven. So UPS was making a strategic decision to lean up their organization in favor of higher margin business and away from Amazon's business. 50% of Amazon's volume with UPS is a very significant amount. When the same thing happened with FedEx, when some of the same conversations were happening with USPS, these were business defining moments. UPS traded up on the news. So, I always generally make an assumption that leadership understand what they're doing, that they've thought about it carefully. And so here, because of that, I think we would identify the Amazon business wasn't great business for them. And they felt like with these cost cuttings, they would be able to be more profitable, and actually even a leaning out in revenue would lead to this higher profitability overall. And because of that, we saw their first quarter earnings down. Their revenue was down 0.7%, just a little bit of a change. Those Amazon effects haven't come majorly into play, but their operating profit was up 3.3%. So that's really their hallmark right now, is not growing overall revenue. It's a cost delivery business. I was looking up some of the salaries. Some UPS drivers, they start at in the 40s, $40,000 a year. Some of them make upwards of $120,000, $130,000 a year. This will lead to a large number of both drivers and distribution house workers that will be laid off. So that will be a pretty significant change for the business. What does this represent in terms of UPS at large? They have about 490,000 workers. So when I read this originally, I thought this is a hallmark of the macro economy. People aren't buying stuff. We're not going to have our Amazon packages delivered within 3 hours like we've been able to. This was a strategic decision by UPS, and the economic uncertainty really seems to be thrown in there and not their major consideration for these actions. So I think it's important that we don't extrapolate two things that are happening together as causation and look at them as correlation. But when you lose 20,000 pretty well-paying jobs out of the economy, that is still a concern when I look at one of my major economic indicators. The last thing I'll hit today is just the end of Trump's first 100 days. It was fast, it was furious, and it has been a really wild ride. One of the major hallmarks of his first 100 days economically will still remain his tariff policy. And because some of the tariffs to China are set to take place and go into effect this Friday, we're going to keep a close eye on that. Other than that, when Trump took office, the markets traded up. Generally, his policies and economic presidential policies will really lead to an unleashing in the economy. But what we have not yet seen that would really balance out some of the tariff changes is a sweeping reduction in regulation in the US economy that would unleash innovation and growth. That's one of the things that I'm going to be looking for in the next 100 days of the Trump presidency. And with that, that's just a really quick sample Market Outsiders for today. And we hope that you enjoyed it. We hope that you got a lot out of it. And we look forward to being with you same time, same bat channel tomorrow.